How to submit a competitive offer. Hi, this is Peter Pan. Today I'd like to go over 3 tips on how to submit a competitive offer for a real estate purchase. The first thing to think about before submitting an offer is to understand your full offer. Most people think that when submitting an offer, price is the only term to consider. There are actually a lot of other things to consider other than price. Which is the amount that you're willing to pay for the property, the second part of the offer would be the down payment and the mortgage. How are you financing the property? Are you paying all cash with no financing? Are you submitting a conventional loan, an FHA? Understanding what your down payment amount is and understanding the loan type you're going for may help you stand out versus other offers. For example, if you have a high down payment in a market like in New York City, where a lot of properties are higher in price point, you may be submitting a more competitive offer versus someone who has minimum down payment or a very low down payment. It matters more in New York City area because the price points are higher. So even if you have a high down payment, chances are you can still be taking on an additional loan for $600,000 sometimes, or even $700,000. So the higher the down payment, the smoother the transaction go, and the less of a hassle later on when it comes for the bank in assessing their risk. Sometimes the amount of money you borrow also matters too. Let's say, for instance, if you're borrowing 90% of the house value, sometimes the banks may take longer to process the loan because they want to make sure that everything else is perfect, so this way they don't take on as much risk. After you understand your down payment and your mortgage, the next part would be the financial profile. What kind of work do you do for a living? What type of employment do you have? Do you work on a salary, or do you work hourly? Or are you a small business owner getting paid on a 1099? All of this matters too, because when it comes to financial institutions who are giving out mortgage, they're more attractive to stable income or salaries. They much prefer that versus a 1099 or a variable income. Why does that matter? Let's say that you have a fixed income and you've been working on a salary in a profession. Maybe you're in the field for 5 years, 10 years. Banks like to see that. And by seeing that, sometimes your loan process cuts down as they don't need to go on to review other information. If you have 1099 or if you don't have a stable income, sometimes banks would require you to submit additional documents. They may verify and triple check your information before considering giving you a commitment. That will make the process take longer. Some banks may even want you to put down a higher down payment. So understanding your financial profile can help you stand out against other buyers who may not have as favorable financial profile. This will also help you in convincing a seller to take your offer versus another offer. After the financial profile, the next part would be the terms. What kind of terms does your offer have? So what do I mean by terms? So let's say, for instance, contingencies. A contingency is something that has to happen before you're able to purchase this property. Some common contingencies are, let's say you're trading in a home. You have to sell a home first in order to buy another one. That would be a contingency. Your purchase is contingent upon a sale of another home. That sometimes make your offer less attractive against someone who may have all their funds available. Another term would be inspection. Inspection is very common when you're buying a single family home, multifamily, because you want to take a look at and see if there's anything to look out for in the property. But in the terms, in the seller's eye, sometimes that may not be so attractive, because usually what happens during an inspection is you take another week. Sometimes after the inspection report comes back, actually most of the time it will require a second negotiation, so that'll make your offer less attractive. Another common term would be occupants. Most homes in New York City, Brooklyn, Queens area, they're multifamily homes. meaning other than the owner's unit, there could be additional rental units where it's tenant occupied. Are you planning to buy a home to live in, the entire home yourself, or are you planning to rent a unit out anyway? If you're planning to rent the unit out anyway, it could be a win-win if you decide you want to take on the tenant. That is actually a very attractive and favorable term for sellers, because some sellers might not want to go through the process of having the tenant find a new home. By you accepting the tenant, it helps your offer stand out versus someone who may need the home vacant. So all of these parts matters other than the price. Down payment, the mortgage, the terms that you have, and your financial profile. By understanding this, you understand your full offer and you'll know how you can stand out. Sometimes even if someone offer a higher price, if you have an immaculate financial profile, terms, and down payment, the seller may pick your offer over the much higher offer. It's not as uncommon as you think. The next part, the second part, is to think about or find out what is the current market condition in the market you're looking to purchase. What neighborhood are you looking to buy in? Is that area a buyer's market where there's a lot of listings available, a lot less listings closing? Or is it a seller's market? A lot less listing, a lot more buyers when you go to open houses, and there are a lot of offers to compete with. By knowing if it's a buyer's or seller's market, you have a good idea on what kind of offer to submit and if you should be competitive with your offer. Some of the indicators to use would be, for example, days on market. You can access this information on every website that provides listing. Zillow, Realtor.com, Trulia, StreetEasy. They all have on the bottom what they call DOM, the initials, or in short for days on market. That number is a good indicator on how strong the market is. Let's use 60 to 90 days as a benchmark. Average transaction takes about 60 to 90 days from beginning to close in a lot of areas. So if you have a property that's closing under 60 days on the market, that's a good chance that the market is hot and it's a seller's market. If it's closing 120 days or above, there's a good chance that that market is not very strong. So you can make a more relaxed offer and still have a better chance at getting it approved. What do you do if the property is only on the market for a few days? Check for similar property. A lot of websites, Zillow, they offer similar properties. Check what they close and how long they've been on the market. By checking a few, you'll get an idea on how hot the market is, the amount of days the property been on the market, and you can make your offer accordingly. The last part to understand the current market condition is to understand what the difference between the list price, or also known as the asking price, and the actual close price, the sales price. By understanding this difference, if you divide the two numbers, you get a percentage. By knowing that percentage, you'll know what kind of number offers to submit that would be fair. So let's say, for instance, if a property is asking $300,000 and it closed for, let's say, $250,000, that is around 20%, the difference. So you see that there's a 20% list to close ratio, or percentage in this case. If the property is asking $300,000 and it closed for $290,000, that's around 3 to 4%. And by knowing that number, you'll know what kind of offer to submit as an initial offer. If you make an offer for $280,000 when most of the properties are closing for $290,000, that could be above the 4% of what the list to close percentage is. And sometimes sellers and brokers might not even take your offer seriously. Let's say that you're in a market where the list to close percentage may be 10%, and you come in with the preconception of another market that's much hotter, and you make an offer thinking that's the same market, let's say for 5%. There could be a difference of 5% of negotiation room or money that you left on the table that you didn't make an attempt to negotiate. So understanding the list to close ratio, the number percentage, is very important for determining what's a fair number to start with. You can get that information from your broker, Or if you want to look for it on your own, you can check the websites too. Divide the actual sales price by the original list price and you'll get that number. That will help you in making a fair offer. Now the last part is to have an exit plan. What do I mean by having an exit plan? When you go into making a purchase for a property, understand what is the final price you're willing to pay and actually be comfortable if the offer doesn't go through. By knowing that number, you save time in the negotiation and you'll be able to make a decision quicker. In a hotter market, by making a quick decision, you're able to get ahead. Or sometimes that would be the difference of getting the property and not having the property. Know that number and know what you're comfortable. If someone offers higher, you're not going to go compete. This way, you don't get yourself in a position where you end up participating in the bidding war, where you end up overpaying, and then you have remorse later on. By doing that, sometimes it's not so good for your buyer's reputation, because if a broker knows that you make high initial offers and then changing it, they might not take you seriously the second time around. Sellers, the same thing. So understanding that number is important too, by having your exit plan. Now, the last tip on having your exit plan is to understand the property type you're looking at. What kind of properties are you looking at? Are those common properties more standard, or are they more specific? For instance, 2-bedroom condos, that's a common property type all over the city. Or let's say 3-bedroom duplex single family homes. Those are also very common. If you know you're looking for common property, you can be more lax in making an offer, because you know if property A doesn't work out, you can go for B. B doesn't work out, you can go for C. It's common. There are a lot of them available. You can submit multiple offers. If you know you're looking for a specific property type, let's say you must have all the bedrooms on the bottom floor because you don't want to run up the stairs. Or let's say you need a home that's corner property. It has to be corner property or specifically located in a specific location and you can't live without. By knowing that, sometimes it's better for you, because then you can submit an offer for a property even if it's a little higher or higher than the other buyers or perceive that overpaying. You may be better off on the long run in that case than to skip out on a property based on the $5,000 or $10,000 difference. Why did I say that? Is because most people who are looking for specific properties, they lose out on one property. They end up being in the market for 6 months up to a year or even longer. By the time you find the property back, you already expended a lot of energy, a lot of time and effort into looking for it, and then you most likely will still end up paying the same price or even higher at that point. So you will actually save out more if you know that this is the property you want and you're comfortable with paying for that price now. You'll still make out ahead. So those are all the tips on how to make a competitive offer. By understanding your full offer, knowing the market condition, and also having an exit plan, you can submit an offer and you'll be able to be more efficient in the sales process. You'll also feel much more fulfilled. Now, I understand each situation could be different and your scenario could be different. If you have any questions or if you like a consultation on your specific situation, feel free to reach out. You can call me or text me at 347-868-9811, or you can email any questions you have to peter@remaxedgeny.com. Thank you.